The central bank, that is Reserve Bank of India, is an apex institution, a supreme monetary authority in the country. It has power to issue currency. It acts as a banker to the government. It's a banker to the banks. It's a custodian of foreign exchange reserves. It controls money supply in the country. It frames monetary policy for the country. So Reserve Bank of India acts in different capacities. But one needs to understand how Reserve Bank of India acts as a banker to the banks. Let us understand. Hello everyone. Welcome to our Eco Studies channel. I am Punavora, your instructor from Interbank Economics Learning Center, bringing 28 years of dedicated CBSE teaching experience. We are releasing series for our 4 subjects to give you an insight about the offered courses on our website. We are releasing series for our 4 subjects to give you an insight about the offered courses on our website that will enable you to prepare for your CBSE and CUET examination. Before we jump on to the concepts, if you haven't already, then hit the subscribe button and ring the notification bell so that you don't miss out on any of our free valuable videos. And if you like the content, don't forget to give this video a thumbs up and share it with your friends. Follow us on our Instagram and Facebook page. Now, let's get started. Reserve Bank of India is a banker's bank. It is a custodian of cash reserves. What does it mean? The current accounts of individual banks are being opened in the core banking solution platform called eCUBER of RBI. The banks are required to maintain a certain proportion of their deposits, that is cash reserve ratio, with the Reserve Bank of India. These current accounts are maintained for participation in centralized and decentralized payment systems and are used for settling interbank obligations such as clearing transactions or buying and selling securities and foreign currencies. So it acts as a clearing house, provides clearing and remittance facility by settling claims of various banks against each other and makes debit and credit entries in their account. So Reserve Bank is considered as a common banker to banks. Hence, Reserve Bank stipulates minimum balances to be maintained by the banks in these accounts. So it is the responsibility of each bank to maintain current account with Reserve Bank to ensure that sufficient balance is available in the account in order to avoid defaults in payments and settlements. Reserve Bank of India is also considered as a lender of the last resort. That is, to give loans and advances to the banks if they fail to meet financial requirements. It can come to the rescue of banks that is solvent but faces temporary liquidity problems by supplying it with much needed liquidity when no one else is willing to extend credit to that bank. The Reserve Bank extends this facility in order to protect the interest of depositors of the bank and to prevent possible failure of the bank, which in turn may also affect other banks and institutions that can have an adverse impact on financial stability and hence on economy. To learn more Visit our website and enroll in our courses to master the concepts in economics. You will find more than 300 lecture videos aligned with the latest recommendations of CBSE curriculum. And with our current introductory offer, you can enroll in each of the course for just rupees 999. So seize the opportunity and join before the introductory offer expires and score high grades in CBSE examination as well as in CUET entrance examination. Like, share and subscribe to Eco Studies channel. Also drop a comment. See you in the next session for another concept. Thank you.